Yeah, it was really good news for Illinois today. Tobacco bonds have been issued by other states. They generally are rated triple B, and these were rated A by S&P on the short notes and A minus on the longer term. So we got a very good rating, the highest rating on any tobacco bond issue since 2001 by S&P. So the rating agencies will tell us we had a well-structured bond that is deserving of an investment grade in the market. So that's good news for Illinois. Our interest rate all in was 5.6% today, less than what we were paying already on those bills that we owe. Those accounts payable under the Prompt Payment Act, it's 12% a year after the first 2 months. So to refinance that debt at lower costs actually saves us money in a substantial amount. Other states that have tobacco bonds that traded today in the market are paying over 8% on their tobacco bonds. So we're actually better today in the tobacco market than Ohio and Virginia and California, and that's good news for Illinois because the market sees that we're still a strong state out there. We got a few problems that we'll be able to solve, and when investors buy a long-term bond, these go out 17 years, they're looking at what the state is going to do long-term, and they're expressing some confidence in our ability to solve our problems.
Is that what it is, confidence that eventually we will get out of this? Why is Illinois different than Ohio and Virginia?
Well, we structured the bond a little better. We did a little better job on this. Frankly, I guess I'm patting myself on the back, but we did a little better job because we provided better coverage. We didn't try to pledge, we didn't try to get rid of all our tobacco revenues. We're still going to have some of these tobacco revenues that will flow into the General Revenue Fund as part of our normal operations. So that gave us what's called a good debt coverage ratio. That got us that high rating. So our bond was well structured. And then it was also well marketed. We worked very hard selling debt in Illinois to make sure the investors understand what we're doing, that we're accountable to them, that we answer their questions, that our financial disclosures are good, and they're sure, based on our debt repayment methods that are in our statute, that we have a sound way of repaying them. So we compare favorably to other states on that basis, and they also know we have a strong economy. Our housing crisis is not as deep as California. We don't have some problems some other states have bouncing back. We've created more jobs in this year than every other Midwestern state. Investors know that. They watch all these indicators. So we got bids today of $5 billion. They were willing to buy $5 billion of our bonds. We were only asking to sell $1.5 billion. So we got 3 times as many bids as we needed to sell these bonds. And that's a good indicator that they believe we're going to be a long-term good debtor for bondholders.
How much longer can the state do this? Sell assets or lease out assets? Eventually, don't we run out of things to sort of take to the pawn shop to get the cash? Because we're paying old bills. We're not even paying future bills with this. Once this money is spent, it's gone, and then we're stuck with the debt. Are we getting to the point where this could be the last one of these, I don't want to say scheme because that has negative connotations, but this sort of use of debt? Is there going to be a time when Illinois is going to run out of things in the cabinet and lawmakers or governor are going to have to take those really, really hard choices?
Yes, we are, and we can't keep kicking the can down the road. And the governor has said so, and that's why he's leading the effort to resolve this problem.